Hello everybody, Mega here, and on this video we're going to be talking about what you need to know as a starter trader, like you're about to kickstart your trading journey. So firstly, what is trading? Basically, we trade every day. Yeah, we trade every single day. So let me give a quick instance. I'm going to use this my phone. All right, if I buy this phone for $1,000 and I sell it for $1,200, I got $200 in profit. You understand? I bought it for $1,000, sold it for $1,200. I got $200 in profit. You get it now? So trading is the buying and selling, but for the financial market, trading is the buying and selling of a financial asset in order to make profits. Now let's jump right into this video. So now you have an overview of what trading means. Okay, now firstly, when you enter the market, the first thing you see is red, green, red, green, red, green candles going up, down. It feels like, bro, what is going on here? Like, what is really going on? So don't be confused. Like, those are what we call candlesticks. That's where the real money sits. You understand? That is where the real money sits. First, okay, let me tell you what trend is. Trend is the market movement. Trend is the market movement. How is the market moving at this particular time? So firstly, how do I identify trends? So in the market, we have three major trends. We have the uptrend, downtrend, and the consolidating trend. The uptrend is called a bullish trend. The downtrend is called a bearish trend, because you know, when a bull wants to attack someone, it uses his horn to headbutt the person, like this two horn, just raise his head like this and it will take the person up. Then a bear, it just pounces on the person, then, you know, do his job. You understand? So that's why it's called a bull, up, bear, down. Consolidating, the market is just going sideways. It doesn't have whether a up direction or a down direction. Yeah. How do I identify an uptrend, which is a bullish trend? This is my pain point. Let's get a bullish trend now. This is my pain point. So let's get started. Now I'm going to move this up. Note, the market will never move in a straight direction. The market goes in patterns, all right, to form one trend. With time frames, when I talk about time frame, you're going to understand this trend of it in better. You understand? But now, first of all, let's talk about how we're going to identify a bullish market. So you see it's already gone up, but this is not the final verdict. This is not the final decision. So now I'm going to take this down. But firstly, before we draw the trend, let me give you guys overview. So now, all right, this is our low. Obviously, it's on the low level. Then the next one, this is our high. Then how do we continue the movement? Are we going to keep saying low, high, low, high, low, high? No. But I want you to know that those are the two words we're going to be working with now. We have highs and lows. Highs and lows. We have a low already and we have a high. So is this now a bearish market? This is not a bearish market until we see the next movement. Okay? So now let's continue our movement. What's the next movement now? We are forming a bullish market. We have to make sure that the next movement is higher than this high here. Most people get this wrong. This is very easy, but once you don't understand, this looks so complicated. Pinpoint here. Now, this is higher than this one. It's like a progression. You're going higher and higher and higher and higher and higher. You're not going backward. So we have to make sure we are going higher. So I pinpoint this here. Then, what do we call this part? Are we going to call it another high? No. That is where we have our higher high. Why do I call it the higher high? Higher than the previous high. So I just shorten it higher high. You understand? So now, what is the next build? Are we just going to go up again? No. We're going to go here. Why do I put it here? It's higher than this low. Remember, anything we are doing is going to be higher than the previous. That because it's a progression. We can't make lower than the previous, higher than the previous. So what do we call this place? Just drop it in the comments, but I'm going to drop it now. Nevertheless. So now, this point is called our higher low. Even if we're having highs and lows, we have to make sure that it's higher than the previous. This higher low, you see, is higher than this old low. This is our old low. Oh, I forgot to tag this place. So this is a low. So this is our old low. So we have a higher low, higher than this previous low. Then let's keep going, let's keep going. So it keeps going like that, but let me show you guys. So this next one again is going to be higher than this our previous high. Then this is now our old high. Then we'll have it here. Obviously it's higher than this. Then our low, we'll have it somewhere here. Then another one here, higher than this high. Another one here, higher than this low. So basically it's just basic logic to build. So it keeps going like that. Sorry, keeps going like that. So now this is a bullish market. When we have a low, we're going to have a high, and the next high should be higher than the previous high. The next low should be higher than the previous low. The next high should be higher than the previous high. The next low should be higher than the previous low. Let's move to a bearish market. How do you identify a bearish market? Okay, we're going to do that right now. We're going to identify a bearish market. We're going to identify a bearish market. Now, since we are going on a bearish market, I'm going to start the pain point from this up level. So what should be the next movement? Down. Do we just end here? Like I said, no, we don't end here because we are going on a progression. Now, this is a downward progression. Instead of climbing up the stairs, we are going down the stairs. Okay, now, we're going to pinpoint here. You understand? So firstly, let's name it again. So now, this is our high, because first of all, we start high before we go low, low, low. So we name this place our high. This is, oh, we have gotten high. Then this next point here, obviously, is our low, opposite of the high. Then, just like that, like we said, our target now is highs and lows. So now I'm gonna put another pinpoint here. So now this point is going to, instead of it being higher than this low, since we are going downward, this is a degrade. So it's going to go lower than this low. Lower than this low. Then instead of this one going higher than this high, it's going to go lower than that high. Instead of this one going higher than this low, it's going to go lower than this low. So let's not do too much so that your brain will not just be hallucinating lower, higher, low, low. So now let me just draw it. Then I know most of you already understand it from here, but so now you see it's going downward. So now we are working with our lows and our highs. So now, what do we call this up point here? The up, just guys, note that all the up parts are called highs and all the down parts are called lows. All the up parts are called high, high, up, down, low. So now I'm going to name here my lower because it's lower than the previous high, lower than previous high. So instead of saying lower than previous high, I'm going to just say lower high. Sorry, lower high. Then what do we call this down one? Lower, because obviously down is a low, we'll name it lower low. What do we call this up one? Lower than the previous high. What do we call this down one? Lower than the previous low. What do we call this up one? Lower than the previous high. What do we call the down one? Lower than the previous low. So now you guys already understand the concepts, obviously. So now to put this into plain words, you guys already know the concept, but to put this into plain words, we're going to say lower low plus lower high make a downtrend. Simple. So this is the concept. Lower low plus lower high equals to a downtrend. Then higher low plus higher high equals to an uptrend. Now you get it right. So now let's move on to a consolidating market. So now, how do we know a consolidating market? Self-explanatory. But this doesn't have to do with higher high, higher low, higher low. So this mostly is more visible in higher time frames, because sometimes you're going to see like a bullish market inside a consolidating market in higher time frames. I'm diverting into time frames, but nevertheless, let me just give an explanation. In a 1 minute time frame, you're going to see the market is going bullish, but once you go to like a 1 hour time frame, you're going to see like it's in a consolidating market. You understand? So now we start from here. It goes to this plate here. It doesn't break above, it doesn't break below, it just stops here. It doesn't break above, it doesn't break below, it stops here. It doesn't break above, it doesn't break below, it stops here. It doesn't break above, so it just keeps going like that. You see, it doesn't make a proper movement, a bullish or bearish movement. The only time we're going to say, okay, it's going bullish now, is when it's able to break this point here. You understand? Once it breaks this point here and start forming, it goes like that, we say the market is leaving consolidation and going into a bullish trend. But once it's, hold on, let me create another arrow. But once you see that it has been consolidating like this, and from here it breaks below, we'll say it's going on a bearish market, bearish market. So it keeps going down. So yeah, basically that's just it. That's just a consolidating market. Simple. Because ranging is ranging. Understand? Mostly we have consolidation after like an impulse or before an impulse. It's just like the market is gathering momentum to push or to push below. So yeah, basically we already know what a bullish market is, a bearish market is, and a consolidating market is. Let's not skip this part. So when you place a buy, you are placing a buy on the market. Okay, now so now this is a line. Then we say you are placing a buy. Okay, you place a buy now and you see this line like this. Once the market goes like this, like this, like this, like this, like this, like this, it dance, like let him dance up, down. As far as going above this line, you are in profit. You understand? When you make a speculation that, okay, this market is going to buy, that line is the speculation line. Okay, you place a buy saying, okay, we're going to expect the market to go on a bullish trend. You say, okay, the market is buying. So it's the opposite direction. We're going to say this line now, once you place a sell, we're placing a sell now. We assume this is our sell line. Okay, now we say you place a sell now. It goes like this. Sometimes you can see like, okay, let's say the market is going on a sell like this. Then this is a temporary bullish trend. As far as it doesn't bust, your sell line, even if it goes like this, as it likes, as far as it doesn't bust through here, you'll still be in profit. You understand? Moving further, we're going to talk about a lot of things, but we can't fit it in onto this video. We're going to talk about news, spikes, and sometimes what causes this movement. You understand? What controls this movement and all. But basically, you understand the concept now of buying, selling, bullish, bearish, consolidating markets, and higher high, higher lows. And now we have the concept. Okay, now let's go into a real market to show you guys how this all works. All right. So now, once you look at this is a perfect illustration. Yeah. So now you can see that the buyers were in control. The buyers were in control from here all the way to here. And on the buy market, we had our highest high here, which means it can't break above. Then the sellers took control of the market. Then the market started selling. So we're going to pinpoint here, like I said. Market, you take this from here. So it just goes like that. Goes like that, basically. Now, this is a sell market. So now, this video, I hope you have been able to indicate the difference between a buying market, a selling market, and a consolidating market, a bullish market, a bearish market, and a consolidating market. So next time, don't just see this as just maybe red and green substances just jumping up and down in the market. They mean something. So in further videos, I'm going to tell you why the market moves. Like I said, I'm going to talk about the candlesticks. I'm going to explain wicks, and basically, like, this is just the baseline. All right, this is just the baseline. I'm going to talk about tools, currency pairs, and the rest. But just know that this is what you need to know. Firstly, we're not going to talk about risk management because I believe on the fact that he who fights today and survives lives to fight another day. You understand? So risk management is very important in trading. So now these candlesticks predict market movements. If I buy, okay, now let me give you another illustration, a sharp illustration of how I can make profits. Now, assuming I bought at this point, you understand? Assuming I said, okay, the market is going like this. After analysis, I say, okay, let me place a buy here. And the market went like this. And I bought here, and the market kept going higher. Then I closed my trend here. I'm going to talk about pips, but for this video, I'm just giving you guys the baseline. And I closed my trade here. Look at it. I went in profit. But assuming I placed a sell, hold on, let me delete this. Assuming I placed a sell at this point, and the market started going up, I'm not in profit because the market went on the opposite direction of my open position. Sure you understand it now? The market went on the opposite direction of my open position. You understand? So stop loss, I can't fit it all into this video, but also know about stop loss and take profit. Those are what we're going to be looking at in further videos. Then we're going to talk about zones, positions. But now you have the baseline now. Buying, once you place a buy, the market should go above for you to make profits. Should go above your buy position. And once you place a sell, the market should go below your sell position for you to make profits. So now you have the baseline of everything, trading, the buying and selling of financial assets. So yeah, basically that's all. But once you join my Telegram channel, I'm going to be talking more on basic things you need to know as a starter trader. Yeah, so that you don't see the market as just one confusing ground where you just go and place buy, sell without knowing what you're doing, because you have to know what you are doing before. I know we don't control the market, but we can control how we move into the market to make profits. So yeah, that's being a profitable trader, being able to control yourself on how you move, your clean entry, your clean exit, and what you do when the trade is running. So basically, thanks for watching the video, and smash the subscribe button. And yeah, we're going to learn about more. Let me just make a quick sketch that you can screenshot and subsequently look at it. So yeah guys, I just made this up right now to show you guys the overview of the point of the whole video. So we have the highs and lows. Let me give you can take a screenshot and look at it from time to time, but let me give you an explanation, so an overview and explanation of the whole video. So firstly, on the uptrend, we have a low. That is the baseline. So now it's time for us to build a trend. So we have the low and the high pointing up now from low to high. We're about to go higher. So now the higher low, since it can't go on a straight trend, let's build something up. So now the higher low, we have to make sure that this higher low is higher than this previous low. That is what we call higher low, higher than previous low. So now another higher high, higher than the previous high. So now we are looking down, higher than the previous high. So now higher low, this other higher low, same thing, it applies. Higher than the previous low, higher high, higher than the previous high, higher low, higher than the previous low. You understand now? So it keeps going like that. That's one form an uptrend. Then for the downtrend, we have the high and the low. We start from high, then we go low. Since it can't go straight, let's build something. So firstly, that low is going to go up, but you will not be able to break above that other high, the toppest high. Take a screenshot of this picture, look at it. Then once you have digested it, then you are good to go. The first thing you need to know as a trader is the trend. You understand? The trend. So the sideways trend, it just goes low, high, low, high, low, high. There's no higher high, no higher low. It just goes low, high, low, high, low, high, low, high. You understand? It doesn't break above or below. It just goes like this, neutral, no up, no down. So now we know the bullish, the bearish, and the consolidating. If you want to learn more and get trading signals, just click the link below in the description to join my Telegram channel. Yeah, basically, and also smash the subscribe button. Smash the subscribe button. Yeah, so in the next video, we're going to be talking about something different, but we're going to be making a progression. But hope with this video, you'll be able to get the highs, the lows, the trend, and what trading really means just in one word. So yeah, bye-bye.